Silver in London is running low. Ronan Manly of BullionStar reported this week on ZeroHedge the following. With the ongoing silver squeeze and huge associated dollar inflows into silver-backed exchange-traded funds, it's now time to look at which of these ETFs store their silver in the LBMA vaults in London, England, and to calculate how much physical silver these combined funds store in these London vaults. The LBMA London vaults are run by 7 vault operators, which comprise 3 bullion banks, JP Morgan, HSBC, ICBC, Standard Bank, and 4 security firms, Brinks, Malcolm Amit, Loomis, and G4S. Here we have a breakdown that's in Ronan's article that shows that roughly 28,698 tons of silver are allocated, which is roughly 85% of all the silver that is LBMA reports in London. That leaves only 4,911 tons of silver from the LBMA's total of 33,609 tons, not already accounted for. Here is a LBMA London Silver Holdings chart illustration of how fast this has happened. See the gray silver bar allocation expansion. According to Ronan's best estimates, just over 100 to 125 million troy ounces of silver remain unallocated in London. As we've seen thus far in 2021, that amount of silver can be bought out by investors in a mere matter of a few heavy buying and silver betting days. Hi there, on behalf of SDBullion.com, this is James Anderson. Do me a favor, smash the like button here. Please share this content with those you think might also enjoy it. The monetary precious metals are still moving sideways, consolidating, with silver showing more strength than gold of late. The gold-silver ratio is closing this week around 66, and looking at this chart, it appears poised to roll down into the 50s during the next monetary metals rally. Very high price premiums for both American silver and gold eagle bullion coins continue. How much longer until both respective spot prices catch up with the physical ask prices for the world's most often bought bullion coins? Earlier this week, I sat and listened through a bunch of silver squealer interviews, scoffing at the influence of new silver bullion and PSLV share buyers. And this week, I wanted to focus on the head of commodities research at Goldman Sachs, Jeff Currie. Let's begin with his February 2nd interview. Following footage is courtesy of CNBC.
Yeah, Jeff, I just want to push back against something you said, not because I think you're wrong, but I want you to clarify it. You point out that it would be impossible for retail investors to force a squeeze in something like silver and the differences between cornering a commodity versus squeezing a stock. But I remember 10 years ago, there was a moment when GLD, the gold ETF, had more assets in it in dollar terms than the SPY. And I do think that GLD was moving the price of gold. I can imagine a similar situation with silver and the silver ETF if people get excited enough about it, where what happens in the markets ends up influencing what happens with the actual metal in real life. You're saying you don't think that that's a possibility?
But here's the main reason why I don't think it's possible to squeeze one of these markets like what the Hunt brothers did in 1980. You got position limits in these markets, and they've gotten tighter and tighter. There's 7.5 million ounces right now, which means that if you were to squeeze it, you would have to divvy up the position to get the inventory off the exchange 53 times, which each position worth $217 million, and then do it in a coordinated fashion. That's why I say it's incredibly unlikely.
Yeah. We'll talk to you soon. Thanks.
It's not like the CFTC actually bothers to enforce position limits amongst various commercial banks. For instance, there's Goldman and JP Morgan running well over 1,500 stopped contracts in their house accounts just last year. Oh, and by the way, just a handful of days before Jeff Currie went on TV and misspoke to everyone, the CME Group's COMEX silver futures contract size limits doubled from 1,500 to now 3,000 contracts. So the amount of days that he was saying it would take, you can cut that in half. COMEX traders can now legally hold sway over a 15 million leveraged price discovery derivative position. But since JP Morgan has such an outsized position underlying over half the fractional silver bullion COMEX pile, it will be through their warehouse's size that they will likely continue trading exempt from these new 3,000 contract position limits, working for alleged clients like perhaps the People's Bank of China, for instance, or perhaps looking to double-cross their competition by going long, while some of them may be short. Now, while the media continuously wants to spin this ongoing silver squeeze, playing it off as some mere retail bullion buying populism, the underlying truth is that we will likely continue to see larger financial players, commercial users, and perhaps even sovereign nations enter into this fray. Some to make mere momentum trade profits, but some perhaps even to better secure strategic silver bullion stockpiles for their future. Here again is Goldman Sachs' Jeff Curry, again on February 2nd, covering some corollaries between the emerging 2020 silver and commodity bull versus the 1970s post-full fiat Federal Reserve note commodity bull.
Then you had the Cold War with Russia. Now we have a quasi-Cold War with China that can require spending. In fact, the big move in agriculture that we have seen over the last week is buying by the Chinese. They're building strategic reserves of grains, very similar to what the U.S. and Europeans did back in the 70s when they built their strategic reserves. So, the analogy here in the magnitude is probably something more similar to the super cycle of the 70s than the one of the 2000s.
What we're looking at now is net Chinese silver production plus imports. It's only the last handful of years that they've plateaued around 3,500 metric tons per year, a little over 110 million ounces per year. Now, that's nowhere near enough silver for the coming production needs and ambitions of the Chinese. I'm showing this to you because the silver squeeze will likely become way larger than the mere retail level narrative that we've been hearing for weeks now. Like Russia, China has been gearing up and stockpiling for this 21st century Cold War. Of course, everyone knows about the massive tonnage of gold bullion both those nations stockpiled in the 2010s. What few of us know is how much silver does China have? How are they going to bid silver away from the Western store of value guerrilla buyers right now? Well, we're going to let Jeff Curry finish this week's update as we go back in time to a presentation he made at his alma mater, the University of Chicago, in late May of 2017. Have a listen to the contradictions he makes about, number one, how comparatively tiny the global commodity price discovery markets are, and point number two, in relation to outsized commodity demand from China and what it can do to commodity prices.
But I want to make a point about how small these real assets are. And I'm going to go back to a story about, I went to go visit the SAFE, the State Agency of Forex in China. This is in 2005. I went in to see him, and he was a CIO there, and he goes, the only reason why I'm seeing you is your head of your London office said I need to talk to you about oil prices. Otherwise, I have no desire to see you. Why didn't he have any desire to see me? He goes on to tell me, he goes, I got to spend roughly $45 billion a month. Exxon, the largest equity in the world, has a monthly turnover of $6 billion. I cannot trade equities because I have no choice but to trade bonds, treasuries. And he goes on to tell me that your puny little oil market with $300 billion of market cap serves me absolutely no purpose. Get out of my office. And I think it underscores just how small these markets are. How did this thing go to 147 in the 2000s? I think he ended up buying oil. See, think about it. Everything was dollar denominated. What are the big dollar denominated assets in the world? Treasuries. Then you run into, he went into mortgage-backed securities, obviously, in the mid-2000s. Commodities. Commodities are all dollar denominated. And that's actually, so point being here is these markets are relatively small relative to the rest of the financial markets. I like to point out all the commodities, you know how much is invested, how much I deal with? Basically about $120 billion. The market cap of what Apple is what? Is it $1 trillion now? It's up there. It's around 800, 900 billion. So all of it is 1/8 of what's in commodities relative to Apple. I'm just going to leave you with the following.
That concludes our market update for this week. As always, take great care of yourselves and those you love. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.